Hello everyone, welcome back to the This Time YouTube channel. This is CSE Weekly Update. The Colombo Stock Exchange extended its bullish momentum this week, with the ASPI climbing 431 points, 12.1% week-on-week growth, briefly touching 20,800 milestone before settling at 20,649. The S&P SL20 gained 195 points, 3.3% week-on-week growth, while total market turnover surged past 45.1 billion rupees, underscoring strong investor participation. The market has continued to trade with RSI above 80 since mid-July, suggesting possible price consolidation in the coming weeks as index works to neutralize from overbought territory. Investor sentiment remained beyond driven by robust corporate earnings, Sri Lanka's steady economic growth momentum, and reinforced by improved macro fundamentals, stable interest rate, and ongoing structural reform aimed at enhancing market efficiency. Today, we are turning the spotlight on one of the key sectors of Colombo Stock Exchange, the banking sector. The sector performance has been promising in the first half of the year, with the banking sector index reaching 1790 level before slight pullback over the past 2 days. The index has been trading with an RSI above 80 since mid-July. This pullback is expected to support price consolidation, easing RSI back below 70. If the index 1677 support level holds, the banking sector index could potentially aim for the 2000 milestone in the upcoming weeks. Banking stock trade at just 5.5 times PE compared to the broader market PE of over 9 times. Price to book value remains below 1, signaling undervalued opportunities and strong growth potential ahead. That wraps up today's market outlook. Next, we'll dive deeper into the three major banks listed on CSE, namely Sampath Bank, NDB Bank, Pan Asia Bank, analyzing their past performance and future growth prospects. All three banks have shown resilient earnings and strong growth momentum in the first half of 2025, making them standout players in the sector. First up is Sampath Bank. Sampath Bank PLC is one of the leading banks in Sri Lanka. From its inception, Sampath Bank has sought to make banking convenient, inclusive, and affordable by leveraging technology. Commencing operation in 1986, the bank pioneered new products and services that transformed how Sri Lankans bank, leading the country into the digital era of banking. 38-year journey transformed banking in the countries as the bank led the way in financial inclusion, putting bank services literally at the fingertips of Sri Lanka. Let's look at the financial performance of the bank. Over the past 5 years, total operating income has shown steady growth, with only outlay being 2022 when it peaked at 111 billion rupees. In 2025, operating income recorded a modest 4% decline, yet significant impairment reversal boosted net profit by 60% year-on-year compared to 2023. Earnings per share mirrored this trend. The bank delivered a strong performance in the first half of 2025, posting profit after tax of 15.6 billion rupees, reflecting an impressive 32% year-on-year growth, signaling the growth momentum remained intact. Most CST-listed banks currently traded at price to book value below 1. Sampath Bank's price to book value stand at 0.96, suggesting undervaluation. Based on the profitability of first half of 2025, EPS stood at 13 rupees 33 cents. Taking a conservative approach and assuming bank replicates 70% of first half result in the second half, the full year EPS forecasted at 22 rupees 66 cents. Current banking sector PE at 5.5 times, well below the CSE market average PE of 9.6 times. Assuming Sampath Bank's PE re-raised to 8 times in line with broader market momentum, the forecasted year-end price range will be 181 rupees to 182 rupees, offering a potential upside of 24% from current levels. Let's look at the technical outlook. The share is currently trading at 145 rupees 75 cents with a key support level identified at 142 rupees. The RSI is from overbought territory, now hovering around 69, suggesting that momentum is cooling off. Recent trading patterns indicate resistance at current price level, with the formation of red candles signaling a potential short-term consolidation phase. If buying interest trends near support zone, the stock could resume its upward trajectory toward 155 to 160 rupees resistance band. However, the decisive break 142 rupees may open the door for deeper pullback. Up next is NDB Bank PLC. Since 1979, National Development Bank PLC has been a cornerstone of Sri Lanka's evolving economy. Steadfast support the nation's growth for over 4 decades. Throughout the years, NDB has played a pivotal role in empowering small and medium-sized enterprises, recognize them as a backbone of our economy. By providing tailored financial solutions and advisory services, the bank has enabled the countless entrepreneurs to realize their ambitions, thereby contributing significantly to the national prosperity. Let's look at the financial performance of the NDB. Over the past 5 years, total operating income has maintained steady growth. In 2025, operating income recorded a modest 3% growth, but significant impairment reversal drove net profit up to 68% year-on-year compared to 2023. Earnings per share followed a similar trend. The bank delivered a strong performance in first half of 2025, posting profit after tax of 4.5 billion rupees, reflecting an impressive 30% year-on-year growth, confirming that growth momentum remained intact. Most CST-listed banks currently trade at price-to-book value below 1. NDB's price-to-book value stands at 0.72, suggesting undervaluation. Based on the financial performance of first half, EPS stood at 10 rupees 55 cents. Taking a conservative approach and assuming the bank replicates 70% of first half result in second half, the full year EPS forecast arrive at 17 rupees 94 cents. Current banking sector PE remains 5.5 times, well below CSE market average of 9.63 times. Assuming re-rating to 9 times PE, in the line with the broader market momentum, NDB's implied year-end price target stand at 161 to 162 rupees, offering a potential 12% upside from current levels. Let's look at the technical outlook. The share is currently trading at 144 rupees 50 cents with a key support level identified at 141 rupees. The RSI has eased to 62 from overbought territory, suggesting cooling momentum. Recent price action shows resistance at current levels, with the red candle pointing to a short-term consolidation phase. Upside potential: if buying interest strength near support level, the stock could retest 155 to 160 rupees resistance band. Downside risk: a decisive break below 141 rupees may trigger a deeper pullback. Up next is Pan Asia Bank PLC. As a truly Sri Lankan bank, the Pan Asia is dedicated to consistency in performance, dependability, and promise of turning aspiration into reality. By offering personalized, high-quality banking and financial services underpinned by cutting-edge technology and innovation, the bank has positioned as a trusted partner in every journey and catalyst for national growth. Let's look at the financial performance of Pan Asia Bank PLC. Over the past 5 years, total operating income has maintained steady growth. In 2025, operating income expanded by 15%, while significant impairment reversal propelled net profit up 116% year-on-year compared to 2023. Earnings per share afford this strong performance. In first half of 2025, the bank delivered profit after tax of 2.2 billion rupees, reflecting remarkable 110% year-on-year growth, highlighting strong sustained momentum. Most CSE listed banks currently trade at price to book value below 1. Pan Asia Bank price to book value stand at zero point 0.9, suggesting undervaluation. Based on the financial performance of first half of 2025, EPS stood at 4 rupees 86 cents. Taking a conservative approach and assuming the bank replicates 70% of first half result in the second half, the full year EPS forecast comes to 8 rupees 26 cents. Current banking sector PE remains 5.5 times, well below CSE market average PE of 9.63 times. Assuming Pan Asia Bank re-rate to 9x PE in line with broader market momentum, the year-end forecasted price range will be 74 rupees to 75 rupees, implying potential upside of 28% from current levels. Let's look at the technical outlook. The share is currently trading at 58 rupees with a key support level identified at 55 rupees. The RSI remains overbought territory hovering around 70, indicate cooling momentum. Recent trading patterns indicate resistance at current price levels, with the formation of red candles signaling a potential short-term consolidation phase. If buying interest strength near support zone, the stock could resume its upward trajectory towards 60 to 60 rupees resistance band. However, decisive break below 55 rupees may open the door for deeper pullback. With strong earning recovery, undervalued price to book value multiples, and potential for sector-wide PE re-rating, Sampath Bank, NDB, and Pan Asia Bank all remain promising players in the CSE banking sector. While recent pullback and cooling RSI levels suggest a short-term consolidation phase, this may create attractive entry opportunities. In the medium term, each bank offers meaningful upside potential as highlighted in individual analysis. We'd love to hear your thoughts. Please comment below. Remember, always invest carefully and do your own research. That's it from this time for today. If you found value in this analysis, hit like, subscribe, and stay tuned for more market updates and insight. Thank you for watching. See you in next one.